Tasha Keeney from ARK Invest was recently interviewed by CNBC. As many know, ARK Invest has long been bullish on Tesla stock with a price target of $2,000 by 2027. Today, we're going to watch some video clips of Tasha, her views on whether Tesla's margins have bottomed, their earnings miss, what she thinks is a huge deal, and of course, Tesla's Robotaxi business model. So today we have Brian White joining us. He has his own YouTube channel called My Tesla Weekend. Welcome, Brian.
Hey, Herbert. It's an incredible pleasure, as always, to be here.
Thank you for that. So I wanted to get your opinion on this because there's several concepts that you have been following closely. Let's start off with, whether or not margins have bottomed. We'll hear what Tasha says, and then I'd love to hear your opinion on it. So let's watch this.
And of course, that's 5 years out to your point. But looking at the results here today, I mean, have margins bottomed? How are we going to know that margins have bottomed? And I ask that because we knew deliveries had missed already coming into this report. So the implication here potentially is that they're seeing softening demand even as they're cutting prices.
Yes, I mean, I think the auto market as a whole is not immune to the macro changes that we're seeing happening today. So I think it's, again, something that people somewhat expected going into this quarter. We've seen they're continuing to cut prices. But here's the big story, right? So EVs as a category, the prices are down like 20% year over year. That's really driven by Tesla. But now a Model 3 is cheaper than the average car in the US. That is huge. That sticker price difference is what consumers who are, the current auto buyers before we have robotaxis, and that's what consumers look for when they purchase a vehicle. So the total cost of ownership of an electric vehicle has been cheaper than a gas-powered car for some time, but that sticker price is what really changes, consumer purchasing decisions. So I think, EVs will continue to take share. The growth of electric vehicles will outpace that of gas-powered car platforms, and that's not changing. So that's what we're focused on, again, for this long-term picture for Tesla.
What do you think, Brian?
Well, first of all, deliveries missed? No, they didn't. Deliveries were down sequentially, but not year over year. Deliveries year over year were still up. Of course they were. We knew that two of the factories were going to be retooling. To suggest that that's a bad thing is short-sighted, foolish, just ridiculous. Tasha was speaking about affordability. Of course, it's already that cheap. And when January 1st comes and you can take the $7,500 EV credit at point of sale, it's going to be a huge difference because like you were saying before, we've discussed this, if you're going to get that money back in 4 months or 6 months or 18 months, it's a little different than if your payment is going to actually be lower by $200, $300, $400. It's going to make a big, big difference. And so have margins bottomed out? Possibly. It's tough to say. We might see some pretty silly margins early on for the Cybertruck in either direction. They could be very low because of capital costs first starting to be amortized, or they could be very high depending on how that's accounted. But I'm not worried about the margins right now. And it does look like interest rates are stabilizing and they may start coming down. If you're looking at this quarter or next quarter, there could be a little bit more pain, but pain is so relative because what we're talking about is already industry-leading margins. 17.6% gross automotive margin is fantastic. It's near the top of the pile, and inching into that is not going to hurt us in the short term. And as rates recover, affordability improves, those margins can increase. And we are still seeing reduced cost of goods sold, meaning they're still eking out additional efficiencies. The battery prices are still coming down, which is the major component of the price of the car. It's all looking good as far as I can see.
So in 3 months from now, the IRA credit's going to be able to happen right on the point of sale. Do you think it's going to be $7,500 or is it going to be half of that? And then what's your thoughts of, this is a price cut, isn't it? This is something that few people are still talking about, but they should be aware that if this happens in January 1st, Tesla might still cut prices now, but when that happens, they might not need to anymore. What's your thoughts?
They might not be able to. They might have to crank the prices back up to match demand. We know they use hotel pricing style, the ticket event style pricing, airline pricing, where they are monitoring sales not even on a daily basis, but intra-daily basis to make sure that inventory matches demand. And if they see that days of that the wait time is starting to increase, the price will increase too. We've already seen increases on, was it the Model S, I think, because based on just what they need to do, just on what they have to do to balance the two. And so those could absolutely happen. Is there a reason? Yeah, they couldn't. On some models, they can increase production. They've got capacity in Texas they're not using on the Model Y. I think before they would increase prices, they would just increase production to match. But on Model 3, they're going to be production constrained unless they add additional lines somewhere other than Shanghai or Fremont, which at this point they look unlikely to do. So the Model 3 could be capable of providing significant new margins that would expand that.
Okay, so let's listen to another clip here of Tasha responding to the Q3 earnings miss that Tesla had, and we'll see what she says, and we'll get to your opinion here.
Now is ARK Invest Director of Investment Analysis and Institutional Strategies, Tasha Keeney. Tesla is the #1 holding in ARK's flagship innovation fund, making up about 10% of the portfolio. Tasha, welcome. So Tesla's been cutting prices, global deliveries, missed expectations, but I suspect you're going to tell me that this miss is okay. Is it because people thought it was going to be a lot worse?
Yeah, I think there's a couple things. So one, we're hearing that the Cybertruck, slated for the end of November. I think people are happy with that. Tesla has continued to make progress cutting the price to produce vehicles, of course, which is very important for future sustainable gross margins. Although, of course, margins this quarter were impacted by the price cuts. What we're focused on is the long term. So I'm really excited to hear about their progress towards a future robotaxi platform. Again, I think it'll be much more profitable than the electric vehicle business, and it'll totally change the business model. So I'm looking forward to hearing more about that.
Okay, so I absolutely love it that when she's on TV, she reminds everybody it's not about this quarter, it's about the long term. What's your any kind of reaction to what she said?
The problem that these channels have is that they don't care about the long term. And honestly, they don't care about your portfolio. All they care about is today's news. And if they can make headlines, they're going to do it. When she's talking about Robotaxi, this ignores the fact that the other companies are struggling so incredibly badly on this. You've got Cruise, who just lost their permit to test in California. You've got Argo that closed down. Comma AI lost their CEO. A lot of companies, Uber and Lyft, both sold off their divisions for scrap. It's a really hard problem, and it feels like there are very few serious players really trying to actually make it happen and get those last nines in to make them a reality. And that will be the hugest catalyst in a stock's short-term performance the history has ever seen, should they solve it sometime soon. So I am not worried about any of that. And I do agree with you and Tasha that we need to keep a long-term perspective on these things.
But we're going to go to Robotaxi model, but hugest, is that a word? Hugest.
Oh, hugest. Yeah, I'm sure it is.
So, we saw a great tweet from Dylan. He walked through all the different challenges that not only you talked about the challenges of Robotaxi. What about the challenges that other car makers are making? Do you want to give me a summary of what you know is happening?
On autonomy or on what?
Just cars in general.
Just cars in general.
Yeah.
Oh my gosh. So where to start? The strike is proving that making cars in America is very expensive. These offers that are on the table are quite generous, and the unions are saying not even close to enough. Keep going. And we don't know where the dust will settle or if the dust will settle. The question there is, are these companies going to be able to maintain manufacturing in the US? Are they going to be spending billions in new wages or billions to move the factories? And what does that do to the timeline? The future is electric and the future is already here. The question is, how soon will auto companies catch up with the reality that we're already seeing? That's just government mandates. Yes, but it's all governments around the world, so the change is happening. So if the US cannot implement protectionist policies that will save legacy companies with their ICE ICE cars. They've got to move into the future, and electric is the future, and they are not making money on those cars. So the other companies are looking at a lot of pain. Lars from Best and Tesla made a video a couple of months ago showing how Ford and GM and Toyota were each planning to spend $2 billion to retrofit each factory. And it was $1 to $2 billion, depending on the size of the assembly plant. Ford has 60 assembly plants. You're telling me they need $60 to $120 billion to electrify. That's a lot of money. And Ford and GM and Toyota, all the big guys, have so many assembly plants around the world. And if each one of them is going to be required to spend billions in retrofitting, you can see where the problem is. Why aren't we talking about all of their margins, which are on EVs already negative? And if they switch to completely EVs, all of those companies, assuming they survive, are looking at 10, 15 years of incredible pain to financially come out of it in one piece.
Yep. Let's get back to Robotaxi. We know that ARK Invest, Tasha, this is her thing. She's done a hugest business model research on Robotaxi. Let's see what she's saying about that now.
I'm puzzled by that idea because if there's robotaxis, I don't need to buy a car, right? And so I'm not sure how profitable that. How are you modeling that, and how soon do you need for it to arrive for it to make sense the way you're modeling it?
Yeah, so you may not need to buy a car. Basically, we think incremental car buyers might forgo that decision, especially if you're located in an urban area. But it'll be a fleet model. So Tesla already has this partnership and integration with Hertz. They talked a little about that in the letter. Some of the app integration that they're doing this quarter. But I think in the future you could imagine that Hertz could be a potential company that maybe houses and maintains these vehicles for customers. Ultimately, the reason that we think robotaxis are so exciting is because ultimately they could be priced below current ride-hail prices. That'll expand the market for ride-hail as we know it today. And we think this could be very profitable. So our estimate for our 2027 price target, which is published, is that we think gross margins could be around 50%. So that's north of the around 20% that we're seeing today, of course, and that's really driven by the autonomy business. We think this will be a services business model where they're charged per mile, and they'll get very attractive margins on that business.
Okay, so she's talking Robotaxi. We've been hearing a lot about Robotaxi. I'm a big believer, so are you. Let's talk about what is new, right? So what has happened in the last 6 months, I think, just to bring it home. She brought up the Hertz, partnership with Tesla. Tell me a little bit about what you know in terms of the software that they've done. Every month, Tesla seems to do some improvements and feature functions in the app that if you think about it and you look back at it, it all kind of adds up to a future robotaxi model. And of course, version 12, we're all anticipating when that might be rolled out. Those are the new things that we've heard recently. What's your current thinking about robotaxi and what you heard there?
Sure. The first thing I wanted to say is I wanted to address something that was mentioned in the video. The talking head, the host, was saying, well, if people are using robotaxis, that means they can't sell cars. And I think the hint there, what they were getting at was this means fewer sales in the future. And it doesn't, because the number of miles a car survives remains the same. Mm-hmm. Whether you're selling 10 cars that last 100,000 or one car that does 100,000 in 1/10 of the time, the total number of miles driven is unlikely to change. The expiration of vehicles is unlikely to change. It just means that whoever's selling robotaxis would command a bigger slice of the pie over the first 5-10 years. So then you've got, your question was, what do we know about the partnership with Hertz? Tesla famously said, we're not going to partner with anybody. We're not going to do anything special. We're not going to offer special pricing, none of that. And then Hertz said, you know what? We're going to buy 50,000 cars. No, scratch that, 100,000 cars. Because what Hertz saw right out of the gate was all these executives and businessmen who travel all over the country all the time. They've got loyalty programs at each of the different car rental companies. And what they saw was an influx of the best customers overnight saying, I want an account because this is the car I want to drive. So that's why they expanded it. And Tesla stuck to their gun, said, nope, nothing special. We're not going to do anything special. But there were enough issues that arose that they said, we need to dedicate at least a little bit of energy to this. So for example, when you get in your rented Hertz, if you already have a Tesla profile, you can bring it into the car with you. You add it to your app. Now your rented car works just like your own car at home. And when you're done and you return the car, you remove it from the app and the car resets to the factory settings. So your app disappears. You're no longer linked to that car. And little things like that are coming. They've got, it doesn't take much from Tesla's end to make this feature available, and they're doing it. And nobody else on the market has anything like that. And it still has room to improve. Of course, everything does, but it has quite a bit of room to improve. But coming from just get in and drive to where they are now has already been a big step, and it's only getting better. So, yeah.
Yeah. Isn't it funny that there's, we take for granted the Tesla app and some features, and yet many car companies do not even have this. So what is your knowledge about over-the-air updates for software and just the kind of features that the app has? Like this one, which is profile transferability, right? You can now go to any Tesla. I can use your Tesla and use my app, and then it'll be my personalized Tesla at that point.
Your seat. So a good example was Chris from Dirty Tesla recently purchased a new Tesla, and he went in and his app, he assigned the car to his app. He put his phone in the car, and when he got in, not only were the mirrors and the seats and the heat and everything set the way he likes it, but Spotify resumed the song he was just listening to in the car he no longer owns. And he was like, "Oh, this is new. I don't know about this." And this guy knows a lot about, I mean, he is Mr. Tesla for real. And yeah, and now in terms of what do you get with all these over-the-air updates? Well, what you get is a slightly better car, a slightly improved car. You get changes made automatically. The great example was, I don't remember which car company it was, Road and Track, Car and Driver, Motor Trend, took out the new Tesla. We're going to test it out. And they said it performed well, but we're only giving it 3 stars because the braking distance under this very unusual circumstance was too long. And Tesla said, "Oh, that looks like a mistake. If we fix it, will you test it again and give us a new score?" And they said, yeah, if we don't have to go anywhere. And they said, no, over the air. And 3 days later, it rolled out. And they said, holy smokes, 5 stars all around. I don't believe they fixed it. It is now stopping better than we expected. Under these conditions, under these unusual conditions, I think they were. And that's not a thing. That's not a thing that exists anywhere else. So they've got, and in terms of what do you get with over-the-air updates, I don't know yet, because I'm taking delivery of my Tesla, my first Tesla, this Saturday.
Yeah. Okay, well then you have to document that and share with us your experience.
I will.
Yeah, I'm very curious to find out all the little things that the app can do, that Tesla's app can do, that it's setting them up for a future robotaxi future, right? Because it all just kind of adds up, and the 2 that we just mentioned are there, but there's more. I guess there's going to be an app store. You can already see the docking station is set up that way. I think there's something about, they'll be able to, find the car in the first place, be able to find the superchargers, all that. There's probably many features I haven't thought of, but you can see that it's coming in that way, right? Any thoughts on that?
Oh, not yet. I mean, Uber and Lyft have very good data, but clearly a Tesla would have better data. Tesla has data on what a car does when Uber's app wouldn't even be turned on. They know where the car lives. They know where the car is today. And if you are, there's a very real possibility that you could take your car on a road trip, go to bed, and have your car make $200 for you while you're sleeping on vacation. Why couldn't it? Now, I don't know if that's something I would want to do necessarily, but it's a very real possibility. And I did want to mention, they were talking about gross margins. Gross margin of 50%. Automotive has a famously lean margin, and I don't see anything Tesla does in the future as having anywhere close to just a 20% margin. Megapacks, they keep cutting the price, but keeping the margin around 25% while making, $500,000 a day in profit. Is it millions a day? I think it's $2 million a day in profit. And there's when they're doing their own auto bidder software, the gross margin on that is going to be astronomical because the marginal cost is almost nothing. When it comes to their own operating their own megapack plants, their own virtual power plants, their margin is going to be well over 20, probably even over 50. And there's no reason, that to expect that Tesla's going to do anything in the future that doesn't have an absolutely absurd margin, and Robotaxi's no exception.
Nice. Okay, let's watch the another clip here with Tasha talking about the Cybertruck and the potential impact that a Ford F-150.
Mentioned Cybertruck and the expectation that deliveries start happening here in the fourth quarter. I mean, Americans specifically love their trucks. How big could this market be for Tesla? Can they take share from the traditional ICE-powered pickup trucks?
I certainly think so. And again, I think it'll be driven by price and performance. We see that electric vehicles offer better performance for the price. They're bringing down sticker prices. You know, we saw that in this past quarter that an early reservation Cybertruck was auctioned for $400,000. So, I mean, it's already a collector's item before it's even in consumers' hands. I think that gives you an idea of sort of the excitement that we see out there. But past that, you know, we've looked at Google Trends data. We see that, you know, the geographies in the U.S. that are, you know, heavy truck buyers are very interested in the Cybertruck. I think that analysts are expecting, you know, some analysts think that that could be somewhat of a niche product. I don't think so. I think it could be huge. You know, we're seeing Ford cut production shift at their F-150 Lightning line. I think that, you know, I would be worried if I were Ford about the Cybertruck coming out. I
would be worried if I was Ford. How about you, Brian?
I am not Ford, and I am worried for them, even though their demise means good thing for my stocks. I don't know how to tell this to my friends at the union, but I am not rooting against them. I am rooting for the survival of their company. The Ford strike is a problem. It is causing slowdowns on their most profitable products and their least profitable. We saw big layoffs at the Lightning plant. Now, I have a friend, Ryan Lightning Fulcher, who is a big Lightning guy. He let me drive his Lightning with Blue Cruise and make a whole video about it. His Lightning has been in the shop for over 30 days, and he still doesn't know when he's going to get it back. He is now in lemon law territory and may be returning it just to claw back that massive depreciation he suffered while he awaits his Cybertruck. That's the worst possible scenario for Ford. Is not only are you losing a future sale, you have to take back the truck you already sold. That's going to eat them alive. There's a lot of, I'd say, misunderstanding of the demand for Cybertruck. There are analysts saying 250,000. Do you really think they could sell that many? Oh, yes. Yes, they can. Like Tasha said, it's all about the price and performance. It's all about the utility at that point. Now, certainly, there's going to be a lot of parking lot princess editions that never go off-road and never do any work. And that's already a big part of the truck market, for sure. You've got to look at that, too. But when it comes to the price and the utility, it's going to come down to, does it do the job or not? We may see very high pricing on it over the first 6 months, year, maybe even 2, just like we did with the Model S, the Model X, the Model 3, not as much with the Y, and even the refresh models S and X started very high, and the price normalized quickly. By the time we get to the portion of the queue where the demand requires low pricing, they will have low pricing. Though I am less and less convinced that's going to happen early on because the price is unknown, the specs are unknown. And the last thing I will say on the Cybertruck is I have heard rumors, grumblings from the ground in Texas that say there is a version 2 of the 4680 that is already in development that in the future, at some unknown date, would provide 600 miles of range for the Cybertruck. And if you get a 600-mile range Cybertruck, that means towing, you're at 300 miles. That's enough. That's 4 hours at 70 miles an hour or 5 hours at 60. 5 hours while towing is enough. You've got it. You've got what you need. Now all you need is enough pull-through chargers to make a full day of driving a realistic possibility while you're having lunch.
I'm still stuck at the parking lot princess utility.
Yeah, that's what the big jacked up trucks are that you can't use for anything but
just there
looking good.
They look good in the parking lots.
Yeah.
I love it, Brian. Brian, you need to be on CNBC. You have just a wealth of knowledge. You just drop so many gems here. Thank you so much, Brian. Follow him on his YouTube channel, My Tesla Weekend. Thanks, Brian.